Hey traders, Trader Geek Sam here with your Sunday, May 31st, 2026 market review and preview. Hope you're having a great weekend. And I'm back after a little break last weekend. And we've got month end to take a look at. So let's take a trip down trading and market memory lane. So this was Friday's action and kind of a mixed bag. So breadth wasn't all that great as it has not been for the past couple of weeks, but gold was up about 1%. The Dow was up 0.75%. The Q's eking out about 37 basis point and the SPY about a quarter of a point. VIX losing another 2.67%. And the smallest of the capitalizations, the microcaps down about 1%, and IWM, the small caps down about a 0.5%. So a mixed bag here, but most of the strength came in gold on Friday. If we look at the week, the final trading week of the month, Q's tacking on about 3%, and the microcaps 2.33%. So they were leading the way. Mag 7 put in a respectable 1.95%, and IWM almost 2%, as well as the total stock market index, the Vanguard, 1.5%, along with the mid caps coming in there. And you can see the SPY about 1.5%. And the bottom is the VIX losing about 8%, closing below that 16 level at the 1532 level. Bitcoin not participating in this risk on rally, losing about 3.11%. Dollar losing a little bit of ground on the week. Taking a look at the major markets for the month of May and the second month of the second quarter, Q's far and above the rest in the lead, up 10.5%. Mag 7 tacking on another 7% almost, and microcaps neck and neck with the Mag 7. SPY up 5%. This is a whole year in 1 month. Total market index 5.18%, IWM 4.48%. The small caps. Dow among the major large cap indices bringing up their rear. Finally showing some strength on Friday, getting the DIA to close about 510. Mid caps right there in the middle, 2.48%, and the VIX you can see is at the bottom. So is Bitcoin. Not a good month for Bitcoin, and gold losing 1.5%. This quarter, which is now 2 months old, we have one more month to go. Look at the performance, and it would help if I put in the right year. So okay, QQQ, 28% so far since the March lows, and Mag 7 up 22%. Microcaps up almost 20, IWM small caps, no slouches, up 17.11, and SPY 16.3%. VTI, total stock market index, no need to throw darts. You can put it in the VTI and get 16.5%. Mid caps, a respectable 10%, as was the Dow. And so Bitcoin is up since the beginning of the quarter, though it seems to be fading. At the bottom, VIX losing a whopping almost 40%, and gold down 3%. TLT, the 20-year bonds, around losing about a 1%, and the dollar losing a little bit of ground. Year to date, here's our favorite. Microcaps leading everything, and that's up 21%. Qs not too far back, 1%. Small caps, mid caps, VTI, total market index, SPY up 11% from the beginning of the year. Mag 7 up a mere 7%. The recent performance would suggest otherwise, but they have been in a slump, or had been in a slump since October of last year. DIA up 6%. Bitcoin still down double digits on the year, for a year that sees the QQQ up 20. To see this 16.59 would indicate that definitely the risk on for the QQQs is not translating to risk on for Bitcoin. TLT down 1.6%, and the aggregate bonds just basically flat on the year, as are the high yield bonds. So these bonds can't seem to catch a break, especially with interest rates going. So if we take a look at the sectors, and let's just go to the weekly, metals and mining on the back of copper up 7% on the week, XLK up 6%, IYT transports on a tear up almost 3%, XRT retailer stocks 1.76%, followed by materials, discretionary, industrials, and communications, which mostly are Meta and um, Google. At the bottom of the list, energy pulling back on continued peace talks in the Middle East, XLP, staples down 2.23%, and utilities can't get out of their own way, 2%. On the month, XLK technology far and away the winner, up 20% almost. IWC telecommunications. This one includes the likes of Cisco and AT&T, 5.66%, metals and mining 5.46, and transports up 3% for the month. At the bottom, energy, utilities, and retailer stocks. Heading towards the quarter, look at XLK, 44%. Nothing even comes close. XME, the next closest at 15. That's metals and mining, then telecommunications, transports, discretionary, real estate, industrials, financials, also not showing much of a performance during this quarter. At the bottom of the list, energy losing 8%, but it's been on a tear. I think we'll see still positive for the year. XLU losing 3.2%. Year to date, XLK, IYZ telecommunications, XLE, there you go. It's way up there still, even with the weakness in the last quarter. XME, metals and mining, uh, materials, transports, XLI, industrials. At the bottom of the list, financials are down on the year almost 6%. Healthcare, 3.44%. Communications and retailer stocks, flat on the year. XLY, which is mostly Amazon and Tesla, are just kind of up and down, but really not going anywhere. Taking a look at the Mag 7 last week, you can see that kind of a mixed bag with Nvidia and Google down on the week, and the rest of them up, with Microsoft bouncing back really nicely that last week, along with the software stocks. Meta up 3.65% on news of new subscriptions, and then Tesla up 2.3%. On the month, the only negative one, surprisingly, is Google down 1.44%, and Apple holding that 310 level at up 15%, and Tesla recovering a bit, and Microsoft also a nice recovery. On the quarter, all of them are in the green. Meta's the weakest, Google the strongest, with Amazon and Apple not too far behind. So all of them double digits, some of them close to 17. But if we take a look at year to date, it's not so bright. You can see 3 out of the 7 are down on the year, although they are single digits. Google still far in the lead, along with Amazon and Apple and Nvidia, all up double digits. So that's kind of a brief tour through history of the major indices and what have you. So let's take a look on what's happening with the charts and make some comments there. So we could see here, Tripane daily chart, weekly chart, monthly. We'll start with the week with the daily. You can see Friday was a bit of a doji, and the markets were up. The SPX was up about 40 points at one point, and then kind of settled for about 9, 10 points up. So you got a little doji indecision. So we made a new all-time high on Friday. We just barely missed kissing the 7,600 level. And, for trading purposes, You could treat this doji as if we go up above 7,600, we should have a little bit more of a rally. And if we trade under the low of the day, 76, 75.63, we could have a little bit of downside into Thursday's robust candle. But in any case, I've got 75.20 marked here as um, critical support here. That's kind of the low on or the close on Thursday. We don't want to give that Thursday bar back, and otherwise it might portend a little bit more weakness. But above all moving averages, bullish chandelier stop, bullish parabolic stop and reversed stop. So nothing bearish about this chart above all moving averages. And when we look at where the implied move last week, we basically closed on where it was last week. We had um, an implied move in the SPX for last week, which is about 115 points. And coming into this week, I thought we would have something sub 100, but we have an expected move this week of about 102 points a week where we have jobs numbers. We'll look at some of those economic reports, but we did move above the expected move last week and move back into range. MACD, which has been sideways, is trying to flip back to a buy signal, although we're not seeing breadth really expand. So we saw the hints of rotation on Friday into software names and a little bit of weakness into the semiconductors. We'll see if that was a an end of the month anomaly or we'll see follow through. Tomorrow is the first of the month, Monday, June 1st. So usually there's some inflows there, and we'll see if they can make haste of whatever this candle was and continue the upward move. But we do need to see more participation out there. And mind you, this market can continue to go higher even on fewer and fewer names. It's not unheard of. MACD, again, trying to turn positive, but RSI red hot at the 73 level. And that's what bull markets do. They stay overbought. So nothing to complain about here. Looking at the weekly chart, we can see here that a nice follow through candle, 9 up weeks in a row. Very rare occurrence, but this doesn't portend bad things for the market, although we could use a little bit of a breather and a pullback. Bullish chandelier, PSAR, not even on the verge or anything. MACD solidly positive, nothing wrong here. And we are overbought on the RSI basis, but overbought can stay overbought for a long time, and that's what bull markets do. They don't let you in, and everybody waiting for a pullback might be waiting a while. Although the VIX, which I'll show you, is indicating that we might see a little bit of volatility this week. Monthly, beautiful candles, nothing to complain about here. Bullish chandelier and PSAR, MACD tried to flip over a couple months ago, but it's still solidly positive, and we remain in the overbought area for the RSI. And you can see that we stayed overbought for many months here as we were making our uptrend, and that's what bull markets do. So bullish, 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 either long or neutral, and definitely not the market to be short in at this time. Switching over to the NDX, and for this coming week, we have a $665 expected move. So that could take us up to the say the 31,000 level or take us down to the 29,667 level. But new all-time high, another doji here. And remember, right now technology is 35% of the S&P 500. So as the Nasdaq goes, so will the S&P when you have over one third of the components dictating what's happening in the S&P index. Um, like the S&P 500, we were just slightly at or above the expected move last week. And with a $665 move here, with all the economic reports and remainder of the earnings, we'll probably see most of that happening. MACD trying to flip positive as we've been going sideways. RSI definitely positive and nothing wrong above all the moving averages. Look where the 50-day is, 26,836. Still inside the Bollinger Band. So no excessive exuberance, at least not on the daily. Switching over to the weekly chart, another nice week. We had a little bit of a doji here, but it was ignored and we continued upward. MACD solidly positive, and RSI remains firmly overbought, which you tend to like to see. On the monthly chart, look at that. Two solid soldiers here. Nothing to complain about. MACD solidly positive. RSI overbought, staying overbought. Bullish, bullish, bullish. There's nothing here that suggests bearishness, but I still believe that some caution is warranted. We tend to get a bit of a move or a rug pull when there's quite a bit of complacency. And I would argue that there is a bit of complacency out there. And we could pull back through time, sure, but we probably will see a 1% down day, is my guess, sometime this week, based on what I'm seeing in the VIX and other indicators. Our the rut, the small caps, um, not as bullish as the others, but you can see here the small caps had a down day on Friday, but recovered nicely off the lows. We're just consolidating here, and that's healthy for the small caps. And MACD is still positive. RSI just can't seem to get overbought on a daily basis for these small caps. But above all, moving averages, bearish chandelier, bullish PSAR, and switching over to the weekly, uh, a new all-time high last week. MACD solidly positive and trying to get back to that overbought level. I mean, we closed right at the 70 level on the weekly chart. Nothing wrong with this particular chart. Maybe some more consolidation. Finally, on the monthly, this one never threatened to go negative like the other two, but MACD and RSI is slightly in the red, slightly above the 70 level, which is what you want to see. And so we have a bullish chandelier, bullish PSAR, and both of those are stops. Chandelier being a volatility stop, and the PSAR is kind of a trend following stop. When you get to one of these dots, and here's the dot where you would switch to um, a bearish stance. You would flip from long to short, but nowhere in range. So definitely bullish there. Here's a charts of the VIX, and I won't spend a whole lot of time on them because they are below the 15. Anytime you get below 17, there's just probably more weakness to come in the VIX, but that doesn't portend a pop. What has me a little bit concerned is that we closed a second day below the lower Bollinger Band, and that could portend a serious snapback, at least for a day or two, maybe just something to scare the children. And you can see here that the VIX doesn't spend a whole lot of time below the lower Bollinger Band before snapping back here. And I don't expect this to be any different. MACD is definitely flipping negative, but again, I would think we'd get a day or two of sideways to down action. 15.32. The other concern I have is we keep making all-time highs, but why aren't we at 12 or 11 at this point? We should be making lower lows in the VIX, and we're not. Looking at the VVIX, um, down at the 86 level. Again, this one's outside of the Bollinger Band, but it bounced a little bit, but nothing to write home about. So the volatility of the volatility, which this is, measures how much VIX buying is going on among institutions, and anything under 100 doesn't really get my attention. But it's fun to take a look at, even in a bull market. So until it gets to 100, it's not really warning of anything, but it can shoot up to that level um, in a single day of volatility. Looking at the VIX, let's call it $15. So what I like to look at is the next monthly expiration, which is in 16 days for VIX options and the next VIX futures contract. So let's call it 15. And if you were bearish on the market, you were expecting a sell-off, then you would buy VIX puts and VIX calls, I'm sorry. So you would buy, let's call it the 16s, $1 out of the money, you'd pay $1.95. And if you were still bullish on the market, you would buy the 14 calls. And look at that. Those are about 5 cents. So 195 versus 5 cents, that's basically um, 40 times the amount for calls versus puts. So that's telling me that there is, especially sometime in the next 2 weeks, we have a pullback in the cards. And you might say, thank you, Captain Obvious. I mean, 2 weeks, narrowing it down. My guess is we're going to see something this week. But if we take a look at the next week's options expiration, too wide to really call it, but 16s at, call it $1.08, and then the 14s have no bid. So it's not less than that. I bet the next couple of days. Yeah, you don't see a whole lot, but if you're buying the 16, call it the 15 calls here. No bid by 50 cents at least 10 times. So enough. I've beaten that horse to death. So the VIX options, one data point here telling me that there is some hedging going on. And, when we look at other things, I mean, if we take a look at Friday's, let me go to Market Watch here. I don't want the heat map, I want index watch. So let's go to the public NASDAQ 100. Uh, 48 advancing, 53 declining on Friday. That's not healthy breath, even though the NASDAQ did close up on the day. Looking at the S&P 100, 44 advancing, 56 declining. So again, this is what we've been seeing for the last couple of weeks. So breadth has just been mediocre or terrible to mediocre at best. And all right, if we think that we have weakness on the tech and the broad-based side. Let's take a look at the Dow indices, Dow Jones Industrial Average. Again, 13 advancing, 17 declining. IBM was up big on Friday. CRM software had a nice day, and so did Microsoft, but still more stocks that were down than up. Looking at the SPX. Um, Here we go. About $102 move, like I said earlier, so give or take. And so, what kind of stuff is driving this? If we take a look at the economic reports, make this a little bigger. You can see Monday, final PMI, ISM manufacturing, construction spending, Tuesday. Um, job openings and labor turnover survey. Wednesday, we get the preview of the jobs number, ADP employment, and US PMI, factory orders, ISM. And we get that good old beige book in the afternoon. Thursday brings jobless claims, initial jobless claims as usual, productivity. And Friday we get the monthly unemployment report on Friday for May. So we'll see what this has. But the way the market has been going, I mean, good news, bad news is good news for the markets, and that's what bull markets do. They rally on good news and they don't go down too much on bad news. And there's nothing much more to say about that. if we take a look at the earnings that are coming up, we're heading into the home stretch for earnings, although this is not a by any means any insignificant names. Here we have Palo Alto Networks Tuesday after the close, Dollar General before the open, Victoria's Secret, a couple of um, retailers along with Signet coming up on Wednesday, Medtronic before the open. This one is just in the medical devices space has just not done well. Macy's more and Ollie's more retailer stocks. And then after the close Wednesday, the big one, Broadcom and CrowdStrike also both been on a tear. Aviva in the software side of things, medical software. And then Thursday, more chips, Ciena coming up, Turo more on the industrial side. And then it'd be interesting to hear what Lululemon has to say. DocuSign, an old favorite from the COVID days, reporting as well. So some significant names coming up in terms of earnings and um, economic reports next week. So 102 points in expected move in the SPX. I think we'll hit those and then some on the week. As kind of final comments to this video, um, you know, just don't get complacent. It is definitely a bull market. It is the bulls have the advantage, but um, you're going to see some pullbacks. You're going to see some rug pulls. Just protect your profits and tell you the typical stuff is that set your stops and watch them. And, when you pull into logical areas of support, then don't be afraid to buy. I still think that June is going to end the quarter on a high note. You don't get this kind of strength and just lose it all of a sudden. But pick your spots and let things show you the way. Show if you're buying certain stocks, let them show support before buying in, especially if they've been strong along the way. They could pull back farther than you expect. Otherwise, it's a bull market. Long or neutral is the way to be. I wish you a great trading week. I am at Trader Geek on Twitter. If you give me a follow, or Trader Geek Sam in the forums. Thanks for watching. And if you have any feedback, just give me a holler and I will talk to you later. Bye bye.